Hello, and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to walk you through some of the most interesting financial market themes that I'm observing. Big rally in June, and it's really extended into August off of those June lows. The S&P 500, more than 90% of the stocks in that index, the U.S. equity market index, are above their 50-day moving average. Doesn't happen very often. Let's talk about typically how good that is. Are we seeing a little bit of early signs of fatigue? We finally had a little bit of a sell-off here on Friday after the very strong momentum. Look at one indicator that foreshadowed perhaps a little bit of buyer fatigue. And then finally, home prices have obviously been strong during the past few years with rock bottom interest rates. We've seen mortgage rates jump as high as north of just 6% here recently. We have seen some demand slow, but new home prices for the first time in history are actually above existing home prices. Let's briefly discuss some of the dynamics behind what's causing that. All right, so on the chart here, we have in the dark, meaning the S&P 500 chart in the red rather, with the percentage of stocks in that index that are above 90%. This is called a market breadth thrust when you have a strong amount of stocks above a trend line. And right now we've got 92% of the members in that index that are above their 50-day moving average. Very strong short-term momentum by the market. Doesn't happen very often. Historically, it's been a pretty good sign for the market. But this is what's interesting. Take a look at since 1975, some of the other times where we saw this signal happen, where more than 90% of stocks in the S&P 500 were above their 50-day moving average. Something interesting that's a little bit different this time. First, the middle column, the 210 yield curve, the spread between the short end of the bond market with the long end of the bond market. Right now, as many of you know, we have an inverted yield curve where people are pricing in an economic slowdown where rates will have to come down, where interest rates are actually lower at the 10-year than the 2, putting us in a minus 38 basis point spread. Take a look at all those other times when we had that resurgence. One thing you'll notice is every single other time, the yield curve was not inverted like it is now. And every other time besides 2019, where the Fed kind of paused in February of that year during that initial bounce off of that previous Christmas Eve low in 2018, the Fed was actually in an easing, which means the Fed was lowering interest rates. Okay, so this is pretty unique and interesting that we've seen this strong market breadth, almost anticipating that the Fed's going to ease. But first time we've seen here, going back where we've seen this market breadth thrust with the yield curve inverted, with so many recession fears, and the fact the Fed continues to push rates higher, fighting that inflation. So I think it's a little bit of a nuance that makes this time definitively a little bit different in terms of the macroeconomic and monetary policy surrounding that price action. So are we seeing some buyers fatigue? There's no doubt. I don't care what technical indicator you look at, trends are strong, breadth is strong, but we're overbought, right? Eventually the market's going to have supply give way. You're going to see people start to take profits. And are we seeing some early signs of that? Percentage of stocks at a 20-day high. Last week, the S&P 500 made a new high, and we saw the percentage at new 20-day highs moving from 58% to 42%, right? We've seen some cyclical areas of consumer discretionary lag a little bit. Utilities have actually been one of the few sectors that are actually at all-time highs. So we've seen a little bit of defensive nature keep pace during the rally. And during the past week or so, we started to see a little bit of slowing of momentum here at the top end of the market here. And so just some early signs that perhaps you're going to start to see some supply come to the market. And new home prices, just shifting gears a little bit to the macro real estate market, obviously been a very strong market. You look up top there, the existing and new home sales median prices continuing to surge higher and higher, especially during and after the pandemic, when we had a lot of monetary, a lot of fiscal stimulus, rock bottom interest rates. All of those are good recipes for a strong mortgage and real estate market. But we've seen that reverse course here recently as mortgage rates are starting to put pressure on the percentage of people that are actually qualified to purchase homes. And if you look at inventory, that's one of the reasons we're seeing home prices stick in there. You've seen inventory pretty low on existing home sales, but continuing to rise in those new builds. In fact, 25% of the homes on the market are new builds. And for the first time, with that large amount of inventory in history, we're seeing the median existing home price higher than new home builds. Kind of a unique scenario here where inventories are just continuing to climb. We might start to see, we've already seen some signs of those building permits for new builds start to slow a little bit regionally. With that, let's end with a fun story. A Canadian candy funhouse company called Canada's Candy Funhouse is hiring a chief candy officer. It pays 100,000 Canadian dollars. I think that's about $77,000 in US dollars. And what's the job? The job is to be apparently the head taste tester responsible for tasting over 3,500 products per month. That's more than 100 per day. Apparently, you've got to be 5 years or older. I don't know if this is just a promotional thing, but it sounds like it's serious. They've received record numbers of applicants. I think every kid's dream. They said it does come with an extensive dental plan because, of course, that's a lot of sugar to be tasting. But dream job for a lot of people out there. It'll be interesting to see who is crowned Canada's Candy Funhouse official head taste tester, known as the chief candy officer. So big opportunity for someone out there to really make a career step for themselves. With that, I want to thank everyone for watching, and I'll see you next time.